All right, another episode of the Startup Vagabond. Today we're in Milwaukee, Wisconsin, here at the Generator offices, if you couldn't tell by us. So you got two Generator employees, and we got some great startups here. If you hear any background noise, they're working hard, building great companies. So with that, Mose, if you wouldn't mind giving a quick introduction.
Awesome. My name is Mose Cassaro, originally from New York. I've been in Vermont, between Vermont, New York, and Boston for the past, I would say, 5 years. More of a founder growing up. I was a kid who dropped out at 12 years old. Have worked at growth stage companies, too, one that was merged with a larger company, one that was acquired. Currently, I run a small venture fund as a solo GP, also run generator programming. I opened up Generator Vermont market a couple of years ago. Currently in Milwaukee working on our international cohort. So it's a soft landing pad program. We have 5 teams from 4 different countries. Everybody's doing at least $250,000 in revenue, up to $1 million, or they're venture back in their home country. So the goal is to provide them a soft landing pad, help connect with investors across the US, particularly in Wisconsin, as they make their journey over to the US, which involves obviously entity flips and what structure works and what do US VCs want to see. So a lot of that work, but we're spending 6-7 days in office, sometimes till midnight. So very hands-on with this particular cohort, which is traditionally how I like to work. But yeah, pretty excited. We got to connect in person as well, which has been amazing. I know I've done this. I've definitely been on an episode before, but it was virtual. Yeah. So super excited to be back.
Yeah, awesome. No, Generator is such a great company, but unfortunately we are very remote. So while he's over on the East Coast, I'm either here in the Midwest or sometimes in Japan. So depending on the week. But with that, wanted to hear some hot takes from you. We'll kind of do a softball one, starting off with the hot topic of the day is AI.
Yeah.
What do you think everybody's getting wrong about it?
I think what everybody's getting wrong about it seems like there's this assumption that winner takes all. I think generally speaking, that's what we say about search. But primarily, if you're looking for a video, you probably go on YouTube. There's vertical search engines. If you're looking for a home, you might go on Zillow or Airbnb, whatever it might be. And then general web search remains. Similar with large language models, I think the assumption is it's probably going to be one model that kind of is the winner take all. I do think the returns will be concentrated and power laws will kick in. It is relative to obviously cost of compute and how much you raised on your data center build-outs, et cetera. But generally speaking, I think there's a lot of capital in search of some sort of a promise, but we are more in the promise world. We're less in the performance world so far still. And then early stage, with the hot take here would be driven by the large language models and frontier labs that do need access to the CapEx. I'm starting to see these extremely inflated valuations when it comes to early stage startups that might be doing anything general AI, right? This could be application layer, this could be something different. So I do think that I feel like we're almost back at the zero interest rate period, the 2021 to 2023 period. That's kind of what it seems like. You're not looking at most cap term sheets under 30 million cap. Seed round valuations are absolutely crazy. Again, I'm talking to investors that are almost waiting on the sidelines with dry powder. And when it comes to really large valuations, it's every decade there will be 3, 5, 10 large winners. Those are the funds or startups that are able to accept, let's say, $1 billion in capital. Those are very few, right? Last cohort, I would say, the most recent cohort now we've had is Anthropic's, OpenAI of the world, and they're able to accept this capital. Maybe before that, the cohort was probably the Ubers and some of the large companies that came out in the last decade after the last financial crisis in 2007. 2009 is when a lot of these companies were formed. I'm not seeing the clear winners on what the next cohort is going to look like. I'm even seeing large funds start to move early stage because of that, right? We're not starting to see some of that CapEx materialize yet. So maybe less of a hot take, but generally a bit uncomfortable with the valuations that I'm seeing at pre-seed seed stages.
All right. So on that same note, yesterday in the whole staff meeting, I presented on the global startup.
Correct.
Startup Genome. They have their global startup ecosystem report. Such a long name. They put it out every year. Great report on what's happening around the world. I personally think we're going to see more of that barbell approach of a lot more investment early, a lot more later, but that middle of how to raise a Series A, I think is going to get squeezed tighter.
Correct.
Where do you think?
I think that's what we're starting to see already, right? So maybe it was taking about 12 to 18 months to get to Series A. Now we're starting to see 24, almost 30 months to get to an A. Part of it is probably driven by the fact that these companies raised in 2021, 2022, 2023, when LPs and GPs were very generous. So GPs were deploying to go raise the next fund. A lot of startups ended up raising at valuations that now they can't justify getting a multiple on. So maybe half of it's driven because getting to Series A is harder and the capital is a little scarce there. And then the rest of it's driven by new or existing funds just trying to do follow-ons for the existing companies. A lot more seed bridge rounds. And generally speaking, it's very hard to justify what the ARR number is when you start to raise your A, depending on your vertical. But I'm seeing a slowdown with companies progressing to that. Generally, I think it was always less than 30-ish% of companies that make it from C to an A. And it seems to be getting tougher. That said, I'm still seeing obviously Series A happen depending on your business model, what you're doing. You're just maybe getting judged on performance sooner, and Promise is only taking you to seed. And then by A, they do want to start to underwrite what's actually going on. Yeah.
All right, general thoughts. What does everyone get wrong? What's the hot take that comes to your mind at night?
I think what everybody's getting wrong is every time there's a platform shift, there's new funds that come out that start to chase some sort of an ROI. So it's almost like the same people that I saw being consultants in 2015 then became crypto gurus in 2020. Now they're AI experts in 2025, 2026. So I think there's a lot of these seasonal founders and seasonal investors that enter. I'm also seeing a lot of capital become, their capital is like, doesn't want to be, so there's a lot of liquidity that hasn't happened, right? So a lot of these funds have their funds tied into Anthropic and OpenAI, et cetera. Those liquidity events will probably bring some capital back in. But generally speaking, I think because of lack of both liquidity and overall sentiment in the market, it's starting to become, again, similar to ZERP, but primarily because of the noise. This noise signal ratio is getting messed up, and there's a lot more noise. It's just because it's a lot easier to be found. Everybody can just white code a couple of things, and all of a sudden you start getting pitch decks. So I'm getting 3 times more pitch decks, all of them vibe coded. But
all the pitch decks made in Claude design, all the code written in Claude Code.
At least we're not seeing Gamma anymore. I feel like the first batch of them were just Gamma decks, and I was like, if you've seen one Gamma deck, you've seen all.
Nice. I think we talked about this last time on the time when we were together. I think the elder tech, taking care of the elderly, specifically more like robotics, what we're calling like physical AI.
Correct.
I think ag tech and cybersecurity were the 3 kind of undervalued markets that are not getting the love they deserve. But I think will have a significant impact on the world over the next few years, outsized impact.
Right.
That I don't think you'll see as many TechCrunch articles about them, but they will shape the everyday, keeping you from nobody cares about cybersecurity until you lose all the money in your bank account. Nobody cares about ag tech until there's no food on your plate. So I think these are the ones that we've gotten comfortable with. But I'm excited to see where those go in the future. What markets would you say do you think are undervalued or not being appreciated from
To first make a quick comment on what you said, I think with ag, like you said, it's always true. It's almost like the business model didn't incentivize investors to go after it. I know some VCs that are just anti-ag. It's not like they're anti-solving global hunger. There's a billion people in the world that are malnourished every day. They get less than 1,200 calories. So I think it's massive. And when I see founders that are actually tackling it in a way that could still create a good enough business model to incentivize growth stage capital, it's actually very nice to see. That said, I think a lot of the hardware investments we're starting to see is just because software defensibility is dying. So it's not like thesis-driven investors are coming in and saying, we're doing hard tech now. I'm starting to see folks trying to do hard tech just because the markdown won't come that quickly. Markdown meaning as an investor, if you invest, if your investment's not doing well, you'll start to say, here are the portfolio companies that are not doing super well. In SaaS, if you invest in an application layer software, the company might lose its defensibility in 12 months as the new frontier models put out an update. With hardware, investors are assuming there's more defensibility, but hardware is really hard. and hardware does require a lot of capex, which does lead to dilution. So I hope it's a long-term trend, but we'll see once liquidity comes back and some of these sub-verticals tied to adjacent to AI, as they start to produce outcomes that might start to shift back, because it's going to be longer liquidity cycles. Like SpaceX, that went IPO recently, I think started raising in 2008, might have taken almost 15 years. So generally speaking, if an investor has been in the space, great, but if they're just coming in this direction now, they might be slightly disappointed when it comes to liquidity events. And then with cyber, I think it's always been a thing, but like you said, we're starting to see some more investments go towards that direction. I think Israel has been leading the way with a lot of cybersecurity, cyber tech companies. With AI, that risk has gotten more pronounced. We talk about these models escaping like every 2 days, like goes and hacks something. So generally speaking, I think cyber is always a vertical where there's enough funding, but now it's nice to see it catch a little bit more traction. Outside of that, I would say, what am I more bullish on? I think one of the things is a lot of hardware companies always were relying on purely grants. I am bullish on manufacturing coming into the US, which is a lot more physical AI, which is stuff that I spend a decent amount of time looking at. But what I'm more curious about is a lot of the startups in the US are still being driven by political sentiments, which is we're bringing manufacturing back because of X or because of Y.
Because of this administration.
Yeah, and I'm not sure
what happens when the next one comes.
Correct. And if it's something like fundamentally, which it has some sort of a core national risk, then yes, we should have it here. But I'm not sure if I want my microwave to say that it was made in the USA. I'll rather get a slightly cheaper one.
Yeah. I'm fine with made in China.
Yeah.
I like it. I think one I wanted to touch on there is I feel like we're moving into this era of like a triangle of you got cybersecurity, AI, and then on this side that people aren't talking enough about is quantum.
Yeah,
I mean, like there's such a more and more overlap of them as every day goes by. We've got one startup that we're working with from Japan who they're creating that interface for the average person to use quantum like on the day-to-day without needing to access, they have a multi-million-dollar machine in your office. Now you can just from your laptop ask it to do what you need it to do and get it like that. So they're creating that interface right now so that it's not cheap, but like, okay, it's only going to get cheaper as we move forward. Yeah. What happens when that touches Claude? What happens,
I think I have started to hear a lot more conversation in the space. It's still very dependent on use case. I assume the rollout will still be similar to like supercomputers, which is like the large labs have access to it first, and then they start to give us some access through how we're essentially renting these renting compute from any of these companies, right, in the shape of tokens. I would want to see more of the application in healthcare. I think there's a lot of healthcare breakthroughs that would lead to a lot better quality of life outcomes. In general, even with SC right now, like it's great that we can focus on developers when it comes to Claude and some of the large language models that are more based on like reasoning models. But generally speaking, I think Google is doing a really good job on the health side of this and making some of these models public. I think maybe that's one part of it that I'm both bullish about and would actually like to see materialize. And if it's quantum that gets us there, we'll see. Do I think 99% of the investors that talk about investing in quantum fundamentally understand what it is, or do you think it's going to be the next buzzword? I think that probably stays up for debate.
Yeah. I like your point on the healthcare side.
You saw Midjourney, the pivot they did?
I haven't.
So Midjourney was this platform that was essentially one of the first ones for video generation, and they did this full crazy pivot, which is now Midjourney spas. So I think they're either opened them up or are opening locations across the Bay Area. Saw a video, which is basically this underwater capsule that you get in, and it does like a full body scan. And the goal is like we move towards preventative care every time you go to a gym or a spa. you get in this chamber and you come out and it does a full body analysis. It can tell you about any progression or disease, etc. And if every month you went to the gym and once a month you're doing this, you're not getting exposed to radiation you would in an MRI or something. And it's like, at least in the demo, it's like creating this really clear picture of all your organs and everything happening inside. And we could probably do pretty good matching based on test 1, test 2.
I'm just so curious. How do you make the jump from like creating videos to like taking videos of somebody?
I wouldn't be surprised if I'm not sure if it was like completely thesis driven and they went to video direction just to get their video models better to then move here. It could have been more so around the fact that they did have a slight lead on video generation, and then they realized like large labs like Google and the rest of them and are probably going to have a pretty good, decent time there. I do like when companies pivot and it's not like a minor pivot and it's like a pretty aggressive pivot. If it's a very marginal pivot and it's just like, it typically leads to not the best outcomes. Depends on what it is, but kind of like Instagram used to be called Bourbon, and then they did this whole flip.
And if it's a minor pivot, most of the time it's easy to replicate.
Correct.
Correct. So well, that's a really cool pivot. I'll definitely be looking more into that.
Yeah.
I like that pivot a lot more than Allbirds pivot into just buying GPUs. Like, well, we're an AI company now. Like, weren't you selling shoes a week ago?
What do you think about Airtable? That the bending spoons picked them up?
I'm just gonna be honest. I know we use Airtable.
Yeah.
I don't like Airtable.
I don't like
I'll use the Google Suite for everything.
Same,
it just makes it so much easier. Don't sue me, but yeah, I'm allowed to have my opinion.
I do think we're probably going to see a lot more of that. So Bending Spoon is this Italian, almost like quasi-tech PE firm that is going up and picking up these almost dated platforms that have massive distribution and access to customer data. But Airtable, I think last valuation might have been like 10, 11 billion, and it got acquired for maybe 1. They might have raised 2 in the last round. I'm not exactly sure, but some numbers close for that. And a lot of their early investors are angry, early employees are angry. I still think it's a good outcome if we look at just their ARR that dropped from last year to this year. In some ways, they were stuck in this place of like, maybe they could have tried to build more defensibility around the core business model, but their core business model was, we help you kind of create these little dashboards for your data, and you can crash that up in Claude pretty quickly. Even that generator, I would say, like, we use it a lot, but we have other stuff that kind of helps you replace it. So I don't want to go into details, but in general, like the same thing.
Yeah. I mean, now that Claude and GPT are like implemented into every software that everybody uses, why do I?
And I hate these startups that just help me make a dashboard anyways. So I don't want you to help me visualize my data. That's not a startup.
So I was talking to somebody else in January. I'm not going to name names, but they were saying, like, I get a call every single day about a different, like, hey, we want to help you do better, like management of this and that. I'm like, I don't need this. Like, you're the headache it would take to switch everything over is not worth whatever perceived value you have.
I think there's switching costs, but I think that's what Airtable is banking on, that maybe perhaps it would take longer for some of this, but it very much seems like a timely exit. And Bending Spoons is almost this tech PE firm that's going and doing acquisitions, and I'm assuming they're going to try to either change the core business model and try to satisfy and keep some of the existing customers. I can't assume, like most PE firms do, I can't assume they'll acquire it and things will stay the same. Sometimes an issue with customers, or when you have tools like that, is like you have really loyal customers that don't want the core product to change. The fact that they're still with Airtable, they might not have wanted to go in that direction. They probably wanted to keep their data in the way and sandboxes it's sitting in. It's almost like Excel. They can add a little plugin, but if Excel ripped out the core product and introduced something new, people start losing their mind.
Yeah. I think one trend, especially in healthcare, that I'm really loving seeing is the individualization. Because of AI, because of all these different methods, it's getting cheaper and cheaper to do more of these tests that historically would have cost thousands of dollars, or you had to have the best healthcare to afford these tests. But now, forgetting the name of it, there's some startup where you can send in a few vials of blood and it'll run 600 tests of here is everything you need to know about your body, and maybe you can do basic tests at the hospital. I went and got some labs done a few weeks ago, and they're like, you're healthy, but probably too much steak. But besides that, it was all right, these are great. These are rudimentary. I want to know how is my body different than like other people's? Like, what supplements do I need to take to keep me more balanced? Like, what do I need to watch out for long term? So, it's killing me. I'll put the name like on the logo like later in editing. But
The one that
functional, Function Health. That's the one. I get all the ads for it. I've got it like screenshot. I'm like, I'm gonna do that one day.
I'm curious to know what their customer acquisition is, because I probably see 20 ads from them every day. That said, I do think they're going to probably bank on their moat. Probably going to come from the fact that people will have this historical data if you send your vial every month for 12 months. Otherwise, like, I don't see something super novel. Like anybody can have a lab where I can send in blood, and creating that little thing is not like you can have iterations. It's kind of like when GLP-1s came out. It was maybe Ozempic in the beginning, and then Roe came out, and there's kind of like startups that enter the space and start raising capital because they realize it's easier to push out. But if I've been with the same company and I've been sending my blood for a couple of years, maybe they'll have some sort of historical data that'll help produce better analyses. And the second part of what you mentioned, I think I'm also very excited about, which is like this almost personalization. Yes. I forget the name of the company as well. Super early. I think they just got into YC based out of Cambridge, where they're trying to do custom vaccines based on your blood and DNA type. And it's almost like right now when cancer medication comes out and we do these case studies, it's very much based on, hopefully it matches, and it's a pretty large data set of folks that go through it. And some of them might have been closer to actually being compatible with it. And if it could be something super specific to somebody, a cancer type, whether it's small cell cancer, whatever it might be, I do think that in the future, that would be nicer to see. I just hope that the regulatory path for them moving to market is quicker.
Yeah, I think, like, I love the CPG space, you know, and it makes it so much easier to like, you should try this thing and like see if you like it or don't, you know. When it's, hey, I need a vial of your blood, that's a little bit harder of a, like, how do you find your early, I guess you could find maybe like early adopters, people who are willing to try anything, but like after that, like, where do you find the people who like will become those monthly subscribers and are not just trying things to try things?
Yeah, and I think right now the whole peptide thing market is like kind of growing, and people are trying everything. I have a lot of my friends will try it. I'm running into people that have tried GLP-1s like years ago, which I didn't even know when I brought it up. They're like, yeah, we've been doing this since 2015. There's some versions of it I would argue are good for you. I still think like we are the mice being tested on in some ways. But I'm pretty sure there's a lot of folks that are out there and willing to kind of be the test bed. I mean, in the beginning, like you said, it'll be the folks that are already maybe late stage cancer and they're looking for other clinicals anyways. They want to be part of some sort of trials. And I know folks in my family that we used to search for these. And there's first startups came out and said, that will help you find trials. And now they're saying we can be a little more specific and make them personalized. That I'm curious about. Obviously, generally curious about energy space. If we can have breakthroughs in nuclear, I know there's some companies in most recent YC batch and the one prior to that have some sort of a straight line, and have, I think one of them, I forget the exact name of the company, one of my acquaintances actually backed it before they had gotten into YC, but I'm curious to see something come out of that space as well. Again, cost of energy is going up as these data centers.
Like modular nuclear energy?
Yes.
Yeah. There are some of those that are popping up that are
correct.
Ooh, if you can put that on the back of an 18-wheeler, power a small town. Okay.
And large full-scale nuclear reactors that they're building. So I think that's another cool space. And then in general as well, partially, I think the one good thing happening is like more people are being incentivized to become founders. I hope it's not one thing maybe I don't like about the hot take here could be a lot of founders are optimizing for optics, because the startups we see do really well are the ones that we see a lot. So it's like everybody's trying to chase visibility. Visibility is good, great for distribution, but visibility by itself doesn't help you. It almost can burn you if you get it too soon. I see startups that will get to the spotlight far sooner than they should have. And then that can be detrimental as well. So generally, good that more folks are looking to enter the space to build. But I see a lot of target ideas. Everybody's trying to make a slightly different agentic model, or some sort of a application layer software that's probably not defensible, but sometimes those founders go build company B and company C that is amazing.
That was always the tough part about CS Nest was like every semester you hear 3 or 4 of the same ideas you heard the previous semester. And like, you're going to learn so much from this.
But the SideShift team from CS Nest did amazing.
Yeah.
And they're really cool.
SideShift, LastLog, Ubicep, like they've all, you know, done amazing work, but SideShift, Linely, you know, they, I feel like, yeah, every time I pull up LinkedIn, I see the founders of Linely or SideShift posting of like, oh, we just did this and like achieved this goal. They're killing it. Great.
I guess let me ask you a question. Do you think venture is teachable, or do you think it's only learnable?
The venture investing side or the startup side?
The startup side, being a founder.
I think the startup side, there are, I would say 25%
Okay.
you can teach.
Yeah.
There are basic things of like, hey, maybe don't insult your customer by this way. Here's a good way to talk to them.
Yeah.
Here's a good, I love starting off like the lean model canvas of like, let's start with the basics. Like, do you know what you're actually doing? If you can't answer those questions, you're going to have a hard time for the rest of it, you know? So I think those things, yes. I think the other 75%, you just kind of have to go out there and get punched in the face.
Correct. Yeah.
I think on the VC side, maybe this is my hot take of, man, I cannot stop thinking about Kevin Dick and
Right Side Capital.
Yeah, Right Side Capital.
He's great.
I love every time we get to go and see him with the.
Oh, you go to the office as well?
We haven't gone to their office, but we go to the a place in San Francisco and we meet up with him.
He's great.
He's amazing. I love his just blunt, like, listen, these VCs have no idea what they're doing. I'm like, you're right. tell me more, Kevin. He's so great at that of like, here's the math. I'm like, here's me proving like most of them have no idea what they're doing. And the ones that do succeed, like you're either Andreessen Horowitz and like you just have so much knowledge and you're such high IQ and like you're so far away, or you're the other 95% who are betting on what they think is right and then trying to justify it to themselves why they made the investment. And then his method is the complete opposite end of we're just going to index, all these, and if we make enough bets with these right like parameters, we cannot help but win. And I love that because that takes me out of the equation. I'm like, I don't have to be the genius. I just gotta, the numbers say this, so I do this. I do think the vast majority of investors are very charismatic. Yeah, they're very good at selling. They're, they might be able to put some math together. Yeah,
I agree. I think there's a lot of these VCs. Again, it's very easy to, there's a lot of like Ben Horowitz at Andreessen used to like say so much bad stuff about other VCs. I love going back and reading some of that stuff. But generally speaking, there's like different theses. One fund could be we're highly concentrated, we only do 10 bets, and we're just looking for the companies that can eventually accept $1 billion, like Founders Fund. Those sometimes will be thesis driven, and they'll say, here's the vertical we identified and here's the vertical we want to invest into. Now let's go find the best operator building something in the vertical. And they'll go meet every company doing something similar, and then eventually they'll say, look, you all are telling us like the obvious things, which is like people want food delivered, for example, and the non-obvious insight is it's some sort of a mathematical problem that you have to solve. And DoorDash founder is a double mathematician, so maybe that's who we go after. And then these folks, like you mentioned, which they'll see some sort of shining lights across a vertical or in some space, and then they'll go in search for trying to fill those gaps internally for their portfolio, or their competitive fund might have done something similar.
How many crypto funds?
That came up and So I think a lot of them are like just in pursuit of like the next shiny object. But I would argue like the top tier one funds like the Andreessen Sequoia of the world and FF, they probably are almost like the kingmakers. In the end, if you aren't in the network and getting picked by them, there's almost like, if I had to say like what's a few things a venture fund can do or an accelerator can do, is like reputation lending. And once they do reputation lending, like even if you're a Teal fellow, for example, it's like relatively easy to get access to other stuff. So that's definitely there. Second is like perhaps they can help you with like policy making, have some sort of access over or access to politicians. Maybe it's your Waymo and you need to get DMV in San Francisco to be very tech forward. You can have access to some stuff like that, and then obviously creating the sense of urgency that then falls on to the founder to kind of continue. And to go back to the teachable, learnable part, I do think it's almost like a road test. Like we can make you take the test before, so you know what is the green light, what is the red light. We can also help you with your first road test, and here's how you parallel park, etc. But if you want to be a Formula One driver, you got to go figure it out, right?
You might have to wreck a few cars.
Yeah, but I'm sure even though they started with like, okay, here's your steering wheel, here's your pedals, and here's what you don't do, and perhaps don't pull the e-brake in the middle of the street.
We're gonna push you in a go-kart first. Yeah,
Correct.
get out there. So awesome, man. I think that's more than enough for one.
Perfect.
Thank you so much. Really appreciate your time. And
Thank you. Thank you
it's
for
been
having
a
me
pleasure to
again.
get to see you here in
Likewise.
Milwaukee.
And I'll maybe see you in Japan next. I'd like that.
So
Perfect.
thanks, man.
Thank you.